Well, now that you understand that, we will see by contrast, what happens if this process of more investment is not triggered by an increase in savings, but is financed through credit expansion. What I mean is through the creation of, out of thin air, of new money materializing in deposits, in credit entries in the liability side of the banking system, acting, this is called through a fractional reserve. What happens? Well, at the beginning, the first symptoms are very similar to the process of good savings and genuine, real savings we just have explained. At the beginning, the entrepreneurs do receive new loans. They do not know if these loans are the result of new savings or if they are just being created through a process of credit expansion. What they see is that even bankers are offering them very easy terms for the new loans. Go ahead, here is the money available. Don't be stupid, use it. The interest rate is very low, even negative in real terms. So nobody would be surprised if entrepreneurs, by and large, take the money, not and run, and go to invest it. To invest it as if the total amount of savings in society would have increased, where in fact this didn't happen, because all was financed through a process of artificial credit expansion based in the creation of new deposits. So with this new creation, entrepreneurs began to shift all the effort and investments to investments that will mature in a more distant future. For instance, in the last bubble, the protagonist of the process in many countries have been the real estate sector. For instance, in Spain, we build every year between 700,000 and 800,000 homes. Exactly the same amount as in the rest of the European Union together. And we are currently having 1 million homes nobody wants. Were entrepreneurs stupid in Spain? No, they were not stupid, I could tell you. I know many of them. What happened is that a process of huge credit expansion was created, especially in the periphery of Europe. Remember that when we entered the euro, it was established as the target of the European Central Bank growing rate of 4.5% for the M3 monetary supply. Against that target, the total amount of money in Europe was growing during many years at 7%, almost twice as much as the original target. But this 7% increase was not evenly distributed all around the countries of the monetary union. In some countries, it was growing at a much greater path. For instance, in Spain, it was growing at 15% per year of new money materializing in credits created out of thin air, when at the same time in France or in Germany it was only growing at 3 to 4%. Of course, this created a huge bubble in Spain, in Ireland, in Portugal, in Greece, in the peripheral countries. Happily, the backbone of Europe is this, in which we are seated. I mean, Germany, Holland, France, Belgium. And the malinvestment was not so huge as in the States, in this part of Europe. But it was really huge, and the harm done in the periphery of Europe was really, really unbelievable. And that's the reason we are now in a so difficult situation in these countries.